Welcome back. Let's get to a drink then. Sula Vineyards company reported a decent set of numbers, but the margin's a little bit under pressure. To understand what's the outlook from here on, we're joined by Mr. Rajeev Samant, who is the managing director of the company. Hi, Rajeev. Good morning and good to see you in. Well, give us a few details. The FY24 is out of the way. How is FY25 shaping up? And if you could narrow down to a few numbers, what is the volume growth, the value growth, and the margins we should work with for the coming year?
So overall, the outlook looks very bright, continues to look very bright for our premium portfolio. So, the story of Sula has always been one of premiumization. We've seen that play out in FY24 and in the last quarter as well, where our premium portfolio has vastly outperformed our cheaper wines. We expect that story to continue in FY25. We look forward to achieving good double-digit growth in our premium portfolio. We did have a little softness in Q4. One of the big reasons for that was that the secondary markets have in fact performed much better than our main markets of Maharashtra and Karnataka. That's really good news actually for the long term, because those are non-traditional markets which are starting to come into their own as wine consuming markets as well. But those are slightly less profitable markets, and hence that does show up. Looking ahead to FY25, we are looking forward to another strong year of growth. Q1, however, is a bit of a challenging environment, considering the elections, a lot of restrictions being put on the trade, some issues with the corporations. So Q1, and there's a fairly strong comparative. So Q1 a bit challenging, but FY25 looking bright.
Okay, all right. Bright would mean double digit for premium segment, which is bulk of your total mix now. So double digit for the consolidated entity as well is something that we should work with. And give us a margin guidance. Is other expenditure spiking up big time?
I don't want to give any specific guidance. We've had 7 consecutive quarters of top line and margin growth and profit growth. So, it's delivering that quarter after quarter is not necessarily going to happen. Wine remains a very exciting long-term story. I think that you should be focusing more on annual growth. I have always guided that the 30% margin that we have reached is a bit high. That really speaking, natural margin in the long term is a bit lower than that. So that has played out in Q4, and moving forward, we do not expect to be always hitting those 30% highs in terms of margins. We want to push wine into those areas where it's not consumed right now. I think that should be really our priority for now. That's what we're going to do. And that will have some impact on margins.
Rajeev, the elite and premium segment, as you mentioned, now is up. It's now contributing 75% of the overall sales. Do you think that figure A is sustainable? And since you're saying that you're trying to push wine to other non-traditional markets as well, do you see that number normalizing as well, or do you see that share going up as the year goes by?
So I think a 75% share, which is of course a historic high, is very much sustainable. Whether it's going to go up further or not, it looks like it's probably going to go up even further. And that's very much our priority at Sula. Let's just put it in perspective. When we talk about premium, we're talking about 700 rupees MRP and up in the state of Maharashtra. We always look at Maharashtra MRP, which is not a hugely expensive price point. It's a very much affordable premium, you can say. And that is very much our focus. And we expect that 75% share should go up from there.
Okay, all right. What's the outlook for the wine tourism business? FY24, you did a 22% growth, came in at around 55 crores. How do you see this part of the business growing?
So I'll give a little color here. Actually, if you look at the overall wine tourism revenues, including the wine that we sell there, that wine actually shows up in our own brands revenue. It doesn't show up in wine tourism. It was close to 100 crore business. So something between 15 and 20% of our top line. Extremely strong growth in FY24, and I'm very happy to say we have a very strong pipeline of new projects ahead. We have taken a big leap in this past quarter by opening our first standalone tasting room outside our wine campuses. And we've decided that's the way to go. We don't want to be tied now only to our campuses. We want to take wine out there to the people, to our consumers who can't always reach to one of our campuses. So this is very exciting for us, and watch this space, many more to come.
You know, Rajeev, I watched it very, very closely, and I'm ready to experiment as well. So for a customer like me, I'm looking at wines, beers, particularly with the weather. Now, we had the United Breweries management yesterday as well, and he was sounding very, very optimistic. How does wine fit in as a category? Beer as well is expected to grow at a fast clip. So could you tell us, for the industry asset class, so to call it, how do you see wine grow, and what are the penetration strategy over there?
So we are very bullish on the growth of wine in India. I want to point out that if you look at the macro picture, this is by far the lowest consuming country in terms of per capita consumption. Way, way, way lower than if you look across even at China, which is another non-traditional wine consuming country. So, just like the beer guys, in wine also, we are very bullish about the way ahead. It's natural that this category should get up to at least maybe 3 to 5% in the future. I mean, we're talking about, of course, a decade ago. Today, it's less than 1%. So this is a story that has a long way to go, has a long way to play out. This is a decadal story. This is not a quarter-to-quarter story. And Sula is firmly in the driver's seat. We have gained market share in terms of premium wines in this quarter and in this year. And we are definitely the strongest player in this segment. So we are very bullish on the way ahead.
Very bullish on the way ahead. That's music to a lot of people's ears, Rajeev. But I wanted to ask you about the acquisition that you made, that of ND Wines. And you've mentioned in your earnings release that the work is about to begin on expanding that 120 square feet bottle shop to a 3,600 square feet wine tourism destination. Can you tell us more about that? By what time is it expected to be completed? And if there is a capex involved, how much is it, and how do you plan to fund that?
So the work is already begun, in fact. So we've already started clearing out, there was some big office space, etc., which we've already started clearing out. So we are going gangbusters on it, and we will open it within this financial year itself. In fact, we are aiming for within this calendar year itself. So it is going to pay off before the end of the financial year. In Q4, we will have a great comparative on that. We're not talking about a lot of capex. When you talk about a bottle shop, a gift shop, a wine tasting room, a restaurant, we're not talking about a lot of capex. This year, the capex plan is around 60 crores, which is about the same as last year. 2 years ago, it was more like 80 or 90 crores. So it's a very manageable capex all in all. Some part of that is the wine tourism. Large part of that is renewable. Just I want to make a note here in terms of our renewable energy. We are now up to 60% of our energy from renewable, and we have targeted 70% of our energy. And wine is pretty energy intensive, just like beer. We are targeting 70% of that coming from our own renewable. So that's a large part of that capex as well.
All right, give us some clarity on the wine industrial promotion scheme. How is that panning out?
So you'll recall that we had reached about 140 crores in dues from the Maharashtra government. We are very thankful to the government for then reviving the scheme, and very pleased to note that on the last day of Q4, March 31st, we received close to 90 crores out of that outstanding. So the outstanding dues have now come down a lot. That train has started moving, and so we do expect to get regular payments on this. It did cause a bit of financial stress, and that's why you have the high interest costs in Q4, which led to PAT, a little bit of a disappointing PAT scenario. But now with 90 crores in the bank, large part of that going back towards repaying debt. So the interest scenario going ahead is going to be much healthier, and you will see that reflected in PAT growth.
All right, Rajeev, thanks a lot for joining in. We'll keep an eye out on how the sales pan out, how the year pans out as well. And we'll keep an eye out on the wine shops and see what they have to offer. You've been, launching a few new products, which off and on they pitch to us. I'm a consumer. My colleague Hormaz, I'm trying to get him back on board on this side as well. Wishing you a good day ahead, Rajeev. Thanks a lot.
Thanks a lot.
Enjoy it. Thanks a lot for joining in. Well, by the way, when we're having that chat with Rajeev, the markets continue to see some selling pressure. So we'll wind up on the show with news that the Nifty is down 160 points. The Nifty Bank today is doing a relative outperformance. the breadth of the market firmly in favor of the number of stocks that are declining. You stay with us. Trading Hour comes up next.